A very good afternoon, all the viewers. Hope you all are doing good. May blessings be upon you all. All this while, we have been doing several topics, having uh, substantial presence in your IP paper, right? Like we were following the accounting cycle. What we were doing was like we started with journal, then we did ledger. Okay, so we simply are following the accounting cycle. Remember, we did journal, and I told you journal has a weightage of 2 marks. Then we did ledgers. In ledger, we did personal ledger having a weightage of 5 marks. Then we did subjournals, that is subsidiary books. They have a weightage of 5 marks. Then we did 3-column cash books having a weightage of 10 marks. Now we are doing trial balance. We are doing trial balance having a weightage of 2 marks. And after this, tomorrow, we will start final accounts having a weightage of 20 marks. But before final accounts, you need to know what trial balance is, because trial balance is a statement that will enable us to prepare final account. And as I said, you are definitely going to get a question of 2 marks on this. So today, we will learn what trial balance is and how a trial balance is prepared. Okay. Now, trial balance is a statement. I said trial balance is a statement prepared. A trial balance is a statement prepared on a particular date with the ledger balances to check the arithmetical accuracy of the books. To check the arithmetical accuracy of the books of account. So trial balance is not any account, it is a statement. Trial balance is a statement prepared on a particular date with the ledger balances to check the arithmetical accuracy of books of account. So the arithmetical accuracy of the ledger balances of all the ledger accounts. So, and again I said it is prepared by taking all the balances of ledgers. We prepare all the ledgers, no? Purchase account, sales account, salaries account, or some debtors account, creditors account, okay, suppliers account, creditors account, or customers account, debtors accounts. All these ledger balances will take and will prepare a trial balance. Okay. Now I'll tell you one simple formula, or let us say I'll tell you one simple rule when we are preparing a trial balance. What is that we have to follow? Trial balance is again prepared basing on the double entry book system. Okay. Trial balance is prepared basing on the principle of double entry system. What is double entry system? For every debit, there is equal credit. For every debit, there is equal credit. So trial balance will tally. Okay, because every time you are making an entry on debit side, you also have to make entry in some other account in credit side. So our trial balance will tally. As I said, trial balance is prepared basing on the principle of double entry book system. So what is the rule we follow? Simply follow this rule. Debit all expenses, all losses. When we are preparing trial balance, we apply this rule. All the expenses are shown on the debit column. All the losses are shown in the debit column. All the assets are shown in the debit column. Okay. All expenses, losses, assets are shown in the debit column, and also drawings are shown in the debit column. And credit, in the credit column, all incomes gains, liabilities, and capital. We follow this simple rule when we are preparing a trial balance. Okay, what is the rule? What is a trial balance? Trial balance is a statement prepared on any particular date by taking the balances of ledger accounts to check the arithmetical accuracy of books of accounts, to check the arithmetical accuracy of the books of accounts. And what is the principle we apply? We apply the principle, all the expenses, losses, assets, and drawings are shown in the debit column of trial balance. And all the incomes, gains, liabilities, and capitals are shown in the credit column. Okay. So without wasting much time, we can directly plunge into the topic. It's a very small topic. We can do problems from your textbook. Initially in your textbook, lengthy problems are given, but then as I said, you are not going to get it for 5 marks or 10 marks. You are going to get it only for 2 marks. So we will practice in accordance with the weightage. So we will take question number page number 209. Question number, page number 209 and question number also 9. You might be thinking, without giving much introduction, without telling the concept, I am directly plunging into the topic. But believe me, it is a very, very simple topic. Simply apply the rule, what I have said. You can do it at the tip of your finger like this, and you can bag 2 marks. Okay, so what are we preparing? We are preparing a trial balance. Let us first see what is the format. Remember, guys, I always tell no, we have different formats for different topics. Like journal has a different format, ledger has a different format, 3-column cash book. Then what we did, this thing, trial balance has a different format. Okay, so this is a simple format. We don't have a date column here. We have trial balance as on. As I said, trial balance is prepared on one particular date. So we don't have date column. It is prepared on one particular date. We simply have particulars, LF, debit column, and credit column. Okay, particulars, LF, debit column, and credit column. So again, let us once revise what is the rule we apply. The rule what we apply is debit, put in the debit column all these items. All the expenses, losses, assets, and drawings are put in the debit column. All the incomes, gains, liabilities, and capitals are kept in the credit column. Okay. So take question number 9. First item, cash. First item is cash. Cash is the asset. See what am I doing? Cash is the asset. I said all the assets to be shown in the debit column. So I'll take 24,000 in the debit column. Okay. Then sales. Sales is a revenue. Sales is a income. Incomes are kept in the credit column. Incomes are placed in the credit column. So I'll write in the credit column. Next is salaries. Salaries are expenses. Salaries, 15,000 are expenses. Expenses are debited. Then creditors. Creditors are a liability. Creditors are a liabilities, and liabilities are to be shown in the credit column. Next, capital. Capital, I told you, no? It is owner's equity. That also shows credit balance. It has to be placed in the credit column. Next is purchases. Purchases is an expense. Purchases is an expense. And expenses are to be shown in the debit column. And lastly, we have debtors. Debtors are assets. Assets will show debit balance. Right? Done. You'll get 2 marks for this. Check the total. One clue you have here is, one hint you have here is, your debit column total should be equal to credit column total. See if it is 39, 79, 99, 1,04,000 in the debit column. 30, 40, 1,04,000 in the credit column. So it is tallying. Okay. If you do it simply like this, you'll get 2 marks for this. And as I said, is a sure question. What is that we are applying if we discuss it in detail? Cash I have taken in the debit column because it's an asset. Sales I have taken in the credit side because it's a revenue income. Salaries I have taken in the debit column because it's an expense. Okay, it is an asset. This is a income. Salary is a expense. Creditors are liabilities. Capital, I told you capital is to be placed in the credit column. It is owner's equity. Purchases are expenses. Debtors are again assets. So see, asset, expense, asset are placed in debit column. And incomes, liabilities, capital are placed in the credit column. Okay, so simple, no? Yeah, that's it. So we'll take one more question. Question number 10, page number 209. From the following balances, prepare a trial balance. Sir, we don't have date column in trial balance. Yes, we don't, because trial balance is not prepared on several dates. The transactions are not recorded on different dates. They all are recorded on one particular date. That is why we write the date here. Trial balance as on. We write it on the top. So again, what is the format? Trial balance as on. The date given is 31st 12 2013. 31st December 2013. Okay. This is particulars column. This is LF. This is debit column. This is credit column. Okay. So see the balances. Capital. Capital is placed in the credit column. Bills payable. It's a liability placed in the credit column. Bills receivable. It's an asset placed in the debit column. Furniture is an asset placed in the debit column. Purchases are an expense placed in the debit column. Sales are an income placed in the credit column. Sales returns or purchase returns are non-cash transactions. Sales, I said, are an income, place it in the credit column. So sale return is the opposite activity of sale. Place it in the debit column. Okay. So capital 28,000. Capital 28,000. I'll place in the credit column. Then bills payable is a liability. Bills payable is a liability. I'll place in the credit column. 13,000. Right? Next, bills receivable 9,000. It is an asset. Bills receivable is a asset. I'll place in the debit column. Furniture 35,000. Again, it is an asset. Furniture 35,000 is an asset. I'll place in the debit column. Purchases are an expense placed in the debit column. Sales is an income placed in the credit column. Sales 40,000 will place in the credit column. Then sales returns are there. I told you sales returns are a non-cash transaction. It is activity exactly opposite to sales. Sales, if you are recording in the credit column. We are placing it in the credit column. Sales return, as it is the opposite activity, will be placed in the debit column. See the total. Check the total. 28, 13, 41 plus 40, 81,000. 35, 44, 70, sorry, 44, yeah, 80, 81,000. Tally, 2 marks. Right? So, we have many more problems. More or less, if you see, all the entries given are very repetitive. Every time is giving the same items, which we have done, like ninth problem, we have almost got the same. Here also we have the same. So I'll look for any problem where some new items are given. Okay, so if you want me to discuss this in detail, capital, I told you, it's an internal liability, it's a owner's equity, it has to be placed in credit column. Bills payable is a liability, placed in credit column. Bills receivable is an asset, placed in debit column. Furniture is an asset, debited. Purchase is an expense, debited. Sales is an income, credited. And sales return is the opposite activity of sales. So we give it a treatment of expense, let us say, and take it in the debit column. Okay. Then question number 13 will take. As I said, almost all the problems have the same items repeated. So it is simply waste of time doing the same problems, same items. Now that you are familiar, what is the rule we are applying? And one more thing I'd like to tell you, like purchase is the expense, we place it in the debit column. Suppose we are getting purchase returns. Just as we got sales return here, if you are getting purchase return, place it in the credit column. Okay. So purchase debit, purchase return credit, sales return debit. Okay. So we'll take 13th question. Question number 13. What are we preparing? We are preparing a trial balance. The format is, as I have drawn on the screen, you see. We don't have date column because it is prepared on one particular date. Trial balance. What is the date given? Trial balance of Radha. Name of the proprietor, name of the firm. If it is given, we can write it like this. Trial balance of Radha as on. Date is not mentioned, so I'm not taking the date. What are the columns? Yeah, what are the columns? We have particulars. We have debit column. We have credit column. We have debit column and we have credit column. Okay. So let us see what are the items given. Opening stock. Opening stock is the asset. Okay. Opening stock is a asset. So we'll take it on the debit side. Opening stock is an asset. The value given is 10,000. And as I said, it is an asset. Assets are to be debited, no? That we'll discuss later. I told you the formula, or I told you the principle what we apply. All the expenses, losses, assets are shown in the debit column. All the incomes, gains, and liabilities are shown in the credit column, right? Purchases. Next item is purchase. Purchase is expense. Purchase is expense. So purchases is to be shown in the debit column. 27,000. Carriage. Carriage is an expense. Carriage is an expense. For you to understand, simply, carriage means, let us say, transportation. Carrying the goods from one place to another. Like if you have to carry goods from one place, like if I purchase from a wholesaler in some area and I have to get it to my godown or my showroom, I have to carry it, no? I may have to get it in some auto or some lorry like this. So I have to pay some amount to that. That is said to be carriage. So in simple terms, carriage means its transportation charges. So obviously it is an expense, no? So I have taken it in the debit column. Next we have creditors. Creditors are a liability. Creditors are a liability. It is 10,000. Creditors are a liability, 10,000. Then we have capital. Capital is owner's equity. It is internal liability. And capital, as I told you, it shows credit balance. It has to be placed in the credit column. Sales. Sales is the income. Sales is the income. Incomes have to be placed in the credit column. So 32,000. Next is salaries. Salaries are an expense. Salaries are an expense. How much? 4,000. Expenses will show debit balance. Debtors. Debtors are an asset. Debtors are an asset. I'll take in the debit column. Cash at bank is an asset. Cash at bank is an asset. I'll take in the debit column. Okay. Now let us see it tallies. It has to. 10 plus 15 plus 32. It is 57,000. 37, 39, 40, 44. No. 37, 39, 43, 51, 56, 57. Yeah. Right? If you discuss in detail, opening stock I said is a asset. Purchases are a expense. Carriage is a expense. Creditor is a liability. Capital is owner's equity, or let us say internal liability. Sale is a income. Salaries are a expense. Debtors are a asset. Cash at bank also is asset. Okay. Yeah. So almost all the problems have the same items. 18th problem, we have items, we'll just discuss, we are not doing it, we'll just discuss. Prepare trial balance of Sudha from the following particulars: opening stock, asset, bills payable, liability, bills receivable, asset, purchases, expense, return inwards is given. Return inwards. Now listen please. Return inwards are nothing but sales return. Return inwards are nothing but sales return. And similarly, return outwards. Sometimes we'll give return outwards. Those are nothing but purchase return. Okay. Return inwards are sales return and return outwards are purchase returns. Right? So we have return inwards here. In question number 18, after purchases, he gave return inwards. Purchases, I told you, are debited. They are an expense. And return inwards are sales return. Sales are credited, sales returns are debited. Purchase is debited and purchase returns are credited. Okay, so you apply the same. The rest all it is okay. Then question number 19. Prepare trial balance of Anji Reddy from the following: transport, expense, capital, liability, sales, salaries, expense, cash at bank, asset, bank overdraft. Bank overdraft is a liability. Bank overdraft is a liability. Sales, income, debtors, asset. Okay. Then we have one last problem, 20th problem. Prepared trial balance of Dr. Chilumula Srinivas from the following. So we'll do this and we'll switch to another topic that is a very, very important topic, final accounts. Okay. So I'm taking up one last question of trial balance. There are few new items here which you need to learn. So we are preparing trial balance of Dr. Chilumula as on 31st December 2018. What are the columns? Do we have date column? Sir, no. Why not? Because a trial balance is prepared on one particular date. So we don't have date column. We have particulars, LF, debit column, credit column. Right? I have taken this question because there are few new items which you need to understand. Buildings are an asset. Debtors, asset. General reserve. Okay, we have general reserve. Now, I'll tell in short what is the effect to be given. Then we have bank deposit, asset. Bad debt provision. Bad debt provision. Okay. Insurance, packing charges, capital, debt creditors, bad debts. Okay. We'll first solve it and then I'll explain you a few points. One is building. Building is a asset. Assets are to be placed in debit column. The value is 80,000. Then we have debtors. Debtors are an asset too. So I'll take 60,000. General reserve. For you to understand, I'll make it simple. All reserves and all provisions are to be placed in credit column. All reserves and all provisions are to be placed in credit column. So general reserve is given as 70,000. General reserve is given as 70,000. Then we have bank deposit. We have a deposit with bank. That is our property, no? That is our asset. So that has to be debited. Then we have bad debt provision. As I told you, all reserves and provisions will show credit value. Bad debt provision. It shows credit balance. It has to be credited. 27,000. Next, we have insurance. Simply, insurance means it is the premium amount what we pay to the insurance company. It is the premium amount what we pay to the insurance company. That is the expense to the firm. It has to be debited, 10,000. Packing charges. By the name itself, you can make out. Charges are expense, no? Any charge is an expense. So expenses are to be placed in debit column. Capital. Capital is owner's equity. Internal liability has to be placed in credit column. Creditors. Creditors are a liability. Creditors are a liability. 60,000. And then we have bad debts. Bad debts are irrecoverable debts. Bad debts are irrecoverable debts. That is, suppose we sold goods to A, rupees 10,000. What do we call A? A is our debtor. Suppose he is not in a position to pay. He says that I'm not going to pay 10,000. I don't have amount. You do whatever. I'm not going to pay. Or he ran away. Okay, he ran away. He is absconding. Then for the firm, this 10,000 is a loss. No, this 10,000 is a irrecoverable loss. He has absconded. Is not to be there anywhere. So this irrecoverable amount is called as tax debt. Isn't it loss to the firm? Yes, it is. So it has to be debited. Okay. So this is how we are done with last question. That is the question number 20. See the total. Remember these points. Reserves and provisions are to be credited. Okay. 80, 140, 260, 270, 282, 292, 297. 2,97,000 is the total. One 2,227,000, 290. Yeah, very true. So done. We are done. We are done with this topic, trial balance. Okay. Now we'll go to the next very, very important topic. Hope you all understood this. It was so simple a topic, isn't it? So simple. Now we'll take up the topic that is the last step in your accounting cycle. We call it as final account. Okay. Now, what does this final account means? See, throughout the year, we'll be working. Throughout the year, we'll be doing all this operation, whatever business we are doing. Like suppose there is a firm doing dealing in electronic items, they do purchase, sale, TV, fridge, AC, all those things. They'll be paying salaries, they'll be paying rent, electricity bill, insurance, all these things. You know, they have to check at one point, no, whether they are going in a right track or a wrong track. So for this purpose, what they do finalization of their accounts. Throughout the year, what they do journal, ledger, you know, all these things. So at the year end, they just check whether they are making profit or losses. Okay, and that is called as final accounts, or we actually call them as financial statements. We call them as financial statements, but for a firm, for your syllabus, we simply call them as finalization of accounts. That is final account. For you, final account is taught in 3 steps. Final account is taught in 3 steps. First, we prepare a trading account. First, we prepare a trading account. Then we prepare profit and loss account. And lastly, we prepare a statement called as balance sheet. If these 3 are done perfectly, it will fetch you 20 marks. Okay, trading account, profit and loss account, and balance sheet. Here, these 2 are ledger accounts, and this is a statement. Balance sheet is a statement. Trading and profit and loss account are a ledger account. We prepare these 2 to know our, let us say, operational results. We prepare these to know operational results. And balance sheet we prepare to know the, or we call this as a position statement. We call this as position statement. Well, let us not get so deep into that. Simply understand, for you, final accounts is taught or learned in 3 steps: trading account, profit and loss account, and balance sheet. And trading, profit and loss, balance sheet, these are prepared by taking the figures from a statement called as trial balance, which we learned just now. I told you, no, why do we prepare trial balance? Trial balance is a statement we prepare to check the arithmetical accuracy of the ledgers, and it will also help us in preparing the final account. So when you are doing problem on final account, the question given will be a trial balance. From the figures of trial balance, you will prepare, you know, trading account, P&L account, and balance sheet. Okay, trading account, P&L account, are a ledger accounts and balance sheet is a statement. Okay. So let us begin with how does a trading account look like, or what are the items we take in trading account. There are so many items that we take in trading account. It's not possible for you to learn all those. So I'll pick only those which we expect in the exam. Okay. So I said trading account and P&L account. First, we are beginning with trading account. We are beginning with what? Trading account. Trading account for the year ended on. We write the date. We take the figure for the entire year. Throughout the year, whatever transactions are done, the one which we have to take in trading account will take it. Okay. So as I told you, we'll learn very sure items that we can expect in exam, not all the items that would appear. This is debit, this is credit, particulars, amount. This is a ledger account only. We don't take all the columns, we simply prepare it like this. And nominal, this trading account is a nominal account. By nature, if I ask you what type of account is trading account, then the answer is it is a trading account. Again, I am telling you, there are so many things. Or in short, I'll tell you, when we prepare trading account, we take all direct expenses. All direct expenses. Or I'll put it like this, all the expenses related to purchases or manufacturing. All the expenses related to purchases or production or manufacturing we take in trading account. How do we start? We start with opening stock of goods. We start with what? Opening stock of goods. Like suppose I said electronic dealer. For an electronic dealer, what is stock? It will be AC, fridge, TV, all these things will be the stock for him. So we take whatever such stock is having, the value will take, not the quantity. We take the value of the stock. Then we take purchases. Total purchases made during the year. Total purchases made during the year. Right? Suppose we made a purchase of 10 lakh. And then during the year, we have returned some purchases. Some goods maybe were not of the good quality. We had returned, let us say 10,000 goods we have returned. So is it wise to show 10 lakhs as my purchases? The answer is no. When we have returned goods of 10,000, it is always wise to show the purchases at 9,90,000, not 10 lakhs. So what purchases we show? In short, if I say, we show net purchases. Purchases minus what? Purchase returns. Purchase में से क्या minus करेंगे? Purchase returns minus करके बताएंगे. ठीक है? So from purchases we return purchase returns. We deduct purchase returns and show the net figure here. Then we take wages. Wages is the payment made to laborers. Okay, wages is the payment made to laborers on daily basis. That amount we'll take here. Okay. Then we take carriage. Carriage, just now I told you, no? Carriage is like transportation charges. We take carriage, inward we'll take here. Carriage inward will take here. If it is carriage outward, we take it in P&L account, the next account what we are preparing. So carriage inward or freight inward will take here. Carriage inward or freight inward. Then to excise duty, custom duty, or any other duty, import duty. Duty is again a tax paid on purchases. Okay, so if you purchase something you are paying custom duty or import duty, or you are paying excise duty. All such taxes we have to take in trading account. Excise duty, custom duty, import duty. And then coal, fuel, gas, water. All these are the items related to a factory if you see. So that is why I told you items related to purchase or manufacturing will take in trading account. I told you coal, fuel, gas, water, power, all these are the items which we are into use in a factory, in a manufacturing concern. So all such expenses also will take here. Apart from this, I'm not going in detail. All the expenses related to factory, like factory rent, factory insurance, factory lighting, any expense related to factory will take on the debit side of trading account. Okay, then there are few more, but as I said, we don't expect such items, so I'm not taking them. As and when we come across such item, I'll explain you. When doing the problem, if we come across such items, I'll tell you there. Okay, so these are the items we take on the debit side. What do we take on the credit side? Very simple. On the credit side, we take sales, and from sales, we deduct sales returns amount, and we take net sales. We take net sales, and then we take closing stock of goods. Right? This is the format of a trading account. Okay, this is the format of a trading account. Then we have to do the balancing of this. What is the net result of this? We have to find out. So, hope this is understood, all of you. Now we have to do the balancing. And suppose credit side is more than debit side. Normally, this would be the case. If the credit side is more than debit side, we call this difference as gross profit. What do we call it? We call it as gross profit. And if debit side is more than credit side, we call it as gross loss. If credit side is more, then we call it as gross profit. And if debit side is more, we call it as gross loss. If it is a gross profit, we'll write it here to gross profit, carried down to profit and loss account. From this, what is the second step I told you? What is the second step? After trading account, what do we prepare? We prepare profit and loss account, no? But what is the result of trading account? It is gross profit or gross loss. Whatever it is, whether it is gross profit or gross loss, that will be transferred to P&L account. That we will show in our P&L account. If it is a gross profit, we take it on the credit side of P&L account. And if it is a gross loss, we take it on the debit side of P&L account. Okay, so go through the format once. What are we learning? We are learning a very important topic, that is final accounts. Final account is prepared in 3 steps: trading account, P&L account, and balance sheet. Trading account, the result will be, what is the result called as? The result of trading account is called as gross profit or gross loss. And that will be transferred to P&L account. Okay. Opening stock, purchases, purchase return, wages, carriage. There are numerous items that we have to take on the debit side. But then, since we are not having much time to know all those items, what I did, I confined it to very, very important items which may be asked in the exam. So what I'm doing now is, I'm taking a very small problem, and let us learn how do we prepare trading account. How do we take the items in trading account? What will be the answer? What will be the result of trading account? That we'll learn. What is the format? Just now we have seen, no? Trading account. How do we prepare? It is a ledger. It is a ledger. Trading account. See, we'll do one problem from the textbook. Page number 270. Question number 1. Prepare trading account of Srikant traders. So, trading account of Srikant traders for the year ending on 31st December 2015. 31st December 2015. Amount. Particulars. Amount. Particulars. Okay. See what are, as I told you, page number 270 of your textbook, academy textbook. First item given is stock. Stock will be taken on the debit side. Opening stock. That is the opening stock. What is the amount? 8,500. Next we have purchases. Purchases. Purchases also will appear on the debit side. Purchases amount is 15,200. Purchases amount is 15,200. From this, we deduct purchase returns. Purchase returns is given as 1,200. So deduct. We'll get 14,000. Net figure is 14,000. We have deducted 1,200 from 15,200. Next we have sales. If you remember, sales will take on the credit side, no? By sales. How much? 33,000. By sales, 33,000. Minus sales returns. Sales returns you see given? Yeah. Sales returns are given as 500. Sales return are 500. Deduct. You'll get 32,500. Then wages. Next item is what? Wages. Wages are debited to trading account. That is 875. Then carriage. I told you know all these items. Wages, carriage, duties, all are debited. So carriage, 500 rupees. Take it on the debit side. Next, factory rent. All the expenses related to factory, I told you know. Factory rent, factory writing, factory insurance. All these are also shown in the trading account on the debit side. To factory rent. How much factory rent is? 925. 925. Then sales return is already taken. Custom duty. All sort of duties. Custom duty, excise duty, import duty, all will be taken on the debit side. Then we have closing stock. Closing stock we take on the credit side. Sir, how did you make out whether it is closing or opening? See the date. Closing stock on 31st December 2015 is given. So obviously this is the closing stock. So all the items are posted. All the items are placed on the perfect side. Now let us see what is the result of this trading account. What is the result of this trading account? See which side is heavy? It is heavy on the credit side. What is the total on the credit side? It is 36,000. Right? Credit side total is 36,000. From that, deduct debit side total. What is the total of debit side? 8, 22, 5, 23, 23, 24, 8, 24, 8, 25,600, I guess. Right, check once. 9, 23, 23, 1, 23, 9, 24, 8, 25, 6. Yeah. So deduct, we'll get 400, 0, 10,400 is the balancing figure. Now, when I have taught you trading account, I told you what is the difference called as? The difference will be called as gross profit. So here, the difference what we are getting, difference of 10,400 what we are getting is called as what? Is called as gross profit. And where do we show it? It is carried down to profit and loss account. From here, it will be transferred to the next account, which is profit and loss account. Okay, it's so simple, no? You can easily bag marks for this. Trading, P&L and balance sheet. Okay, trading, P&L and balance sheet. So today I am concluding the session here. Tomorrow we'll do another two problems on trading account. Then we'll take up profit and loss account. This is how we'll do in steps. Trading account, let's get the perfection. Then we'll do P&L account, and then we'll go to balance sheet, and then we'll do problem based total problem having trading, profit and loss and balance sheet. Okay, so please do practice this. Take care. Goodbye.